Okay, so we're just going to work through an example of how to put together a cash flow statement. So the example we're going to use is exercise 19.7. Firstly, what we want to do is go through and highlight all the cash flows from operating activities. So we're going to do that in green. So obviously cash sales. We'll try that again. So obviously cash sales is an operating activity, and that is a cash inflow, obviously. Collection from debtors, operating activity, obviously to do with the day-to-day running of the business. GST collections is also an operating activity. So basically, if we can remember that anything that is essentially to do with the day-to-day operations of the business is the operating activity. So we've got creditors, also we've got wages, we've got office expenses, we've got shop cleaning, we've got GST payments. So they're all the operating expenses, operating flows. So what we're going to do now is go through and highlight all the investing activities. So obviously this is anything to do with the movement or the purchase or the sale of an asset, non-current asset. So we've got the purchase of the delivery van here, and we've got the purchase of the office equipment. Finally, we've got the financing activities. We're going to do that in blue. So obviously a loan from bank, proceeds from a loan from the bank is obviously a financing activity. Also, we've got the loan repayments here, as well as the drawings. So they're the three investing activities. So if we go here, now all we need to do is basically just add each item under the appropriate heading. So we've got all the operating inflows, might pause it here and just get it all done and then come back and explain a little bit more. So as you can see, all the flows or the cash flows that have been highlighted in green are now under the operating activities. So our net cash provided by operating activities is $87,110. Now noting here that any assets that we've purchased or sold highlighted under the investing activities. Now if we've purchased an asset, obviously that is a negative inflow, negative cash flow, obviously an outflow. So now I've got the purchase of office equipment also. Okay, so we've got a negative flow or an outflow from investing activities. And finally, we just need to get the financing cash flows in the financing activities section. In order to make sure that we've got whether the item is a cash inflow or outflow, just got to remember what it does to the bank balance. If it decreases the bank balance, obviously it's an outflow. For example, loan repayment, we're repaying a loan, so that will decrease our bank balance. Loan from bank, we've actually received money on loan, so that will increase our bank balance. So basically all that's left to do is just put in the cash that was held at the beginning, which in this case was a negative, and we've got $21,610 as the cash held at the end of the year. So obviously, because this is the statement of receipts and payments, basically the cash held at end will be the same, because this is all the cash flows for the period, and then we've basically just put them into the cash flow statement.